Speaking of owning gold, China massively ramped up its gold purchases in April. After adding 160,000 ounces of gold in March, they added another 260,000 ounces in April. That's 8.67 times of the monthly purchase amount from October 2025 till April 2026. Yep, when China only added 30,000 ounces a month. And so now they are certainly considering or continuing to, in fact, 18 straight months of adding metal. In fact, it's the second largest 2-month addition since Q1 2024. Lead analyst for metals for Bank of America is saying it could be as high as 309 by the end of the year. I mean, to actually have people say $300 silver who have credibility, like Michael Oliver, like the lead metals analyst for B of A, it's very interesting. One thing that caught my eye in a big way, you know, I haven't talked a lot about BRICS, but BRICS is still happening in a big way. It's happening under the radar. And two things that caught my eye this week that need to be, I think, talked about is the UAE and China, first of all, making trade deals based on, let's call it parallel trade channels. And these would be settled in yuan instead of dollars. And the one with the UAE was like 24, 25 deals they struck. A couple of them that really stuck out to me was petroleum for RMB or yuan, and de-dollarization of financial channels. So in essence, they're flat out saying these are the deals that we are doing. And one of them I had to dig into because I didn't know what it meant. It was non-oil trade at the billion yuan level. In essence, what they're talking about is that they're expanding their relationships beyond just oil, and the scale billion yuan level is becoming very large. It could be anything, infrastructure, energy mega projects, all of these things. But these are breakthroughs for China and UAE. And let's remember that, you know, UAE is a member of the BRICS. They are one of the 4 original members of mBridge. They, in fact, with China, did the first trade for both gold and oil on mBridge using digital yuan. These are very important breakthroughs that people need to be paying attention to. They've been very quiet about it, but remember, they are laying the infrastructure very quietly and for decades.
Persistent physical outflows and tightening inventories are not stopping, signaling a critical juncture for silver prices. Miles Franklin, president and precious metals dealer Andy Schectman, highlights this trend, echoing the persistent demand from China over 18 straight months. This relentless physical demand, coupled with a global pivot away from the US dollar, suggests silver is poised for a significant price surge. As countries increasingly settle trade outside the dollar system, gold and silver emerge as the neutral collateral in a fragmented monetary world. Here is the math that the smart money is already acting on.
You know, global trade, especially the energy, flowed through the US dollar system. And the more trade that continues to quietly settle outside the dollar system, you know, it's big. And if you have less global demand for dollars, well, that means you have less need for treasuries to recycle said dollars in. And, you know, this is maybe one reason why we're seeing all of these countries increasing their gold reserves, because gold is the neutral reserve collateral in a more fragmented monetary world, right? And you're moving away from the dollar and the treasury. And I also believe that China understands the next world order will be built around resources, manufacturing, energy, supply chains. And that's why they just dropped another $6.1 billion into Brazil in 1 year, more than any other country on earth. And Brazil is one of the most resource-rich countries. And their investments spread across 20 Brazilian states. So it's not random. It's as if they are locking things up for the future because, you know, they're buying things like gold mines, nickel mines, copper mines, rare earth access, power grids, electric vehicle factories. There were a couple car manufacturing facilities in Brazil that the Western automakers, I think it was, one was Mercedes and the other one I think was Ford, I'm not sure, but they left. China came in and took it over. And so they're building this infrastructure. When you talk about them buying things like nickel and copper and rare earths that Brazil is rich in, they already control over 90% of the rare earth refining globally. And now they're doubling down on securing ownership of the actual raw materials. Graphite, nickel, copper, these are the building blocks of all the things that they're making, like EV batteries, AI infrastructure, military systems, etc. And they're doing all of this at the same time. Let's not forget where the nations are increasingly building and talking about trade settlement outside the dollar system. So they're building, their economic influence, if you will, outside the Western system with the UAE, with Brazil. This is on top of all of their Belt Road and all of their, their deals in resource-rich countries that are, which are, massively, under-industrialized. They're coming in and doing that for them. This is the pattern that China does. And, we go around and do things with a stick. They do things cooperatively. We talk about, treasuries and dollars. They talk about, physical assets and refining. And they're playing a game that I think is ahead of ours, at least in terms of what they're trying to accomplish around the world. And they're doing so very effectively, no question about it. You made a comment earlier about the food problems. And, one of the things that China said they were going to do is restrictions on sulfuric acid exports, right? And most of us talked about sulfuric acid in its role in copper mining. And when you look at silver production, only 15% or so of the metal that was mined over the last few years comes from companies like Keith Neumeyer's First Majestic that focus on silver, right? Good guy, everyone, not financial advice, but that's a stock I personally own. And I think people should take a look at it if you own silver stocks or want to. It's one that I like a lot. But companies like his represent a very small amount of the silver that is mined. Most of it comes from byproduct mining, largely of copper, zinc and lead also, but mostly copper. And so the restriction on sulfuric acid is a big deal in copper mining and ultimately in silver mining. But we just heard that, we talk about the knockoff effect that hasn't shown itself yet. There's a company called Mosaic, and it's a major fertilizer company, and it's cutting production on fertilizer and made a statement they're revising their guidance because prices have gone vertical due to the Iran war and surging sulfuric acid prices. And so to your point, that this progression is real. You have the energy shock, the fertilizer input, the freight, the logistics, food inflation. This is not theory. And I think that you will see this, to your point, start to show itself in prices. Now, you can stop me at any point. We've continued to talk about this trend of persistent physical outflows and tightening available inventories. It's not stopping. And, when you talk about China, 18 months of physical delivery without stopping, you're talking about massive, massive amounts.
This is Kaiser Johnson with Liberty and Finance.
This is where the math turns from theory to consequence. While China continues its relentless gold accumulation, the BRICS nations are quietly building parallel financial channels, settling trade in yuan and bypassing the dollar. This deliberate move towards de-dollarization, exemplified by UAE and China's petroleum for RMB deals, signals a fundamental shift away from US treasuries as the global reserve asset. The question now becomes, what happens when global demand for dollars, and thus for treasuries, evaporates? Andy Schectman's analysis reveals how this emerging multipolar monetary world is paving the way for the ultimate refuge, gold, to reclaim its central role.